What's up, everyone? Welcome back. I said I wasn't going to do a video today on Black Friday, not Black Friday, Good Friday. But if you're anything like me, you can't help but ask yourself, how much higher can these markets go? And are we going to see a pullback? And how severe could that pullback be? So today I wanted to discuss what I'm looking at as far as a potential pullback in the stock market, as well as some of these other markets around the world. And I also want to discuss what a what is a well balanced portfolio to protect yourself if we do see some sort of stock market correction or possible recession. All right, guys, if that sounds good to you, hit the like button, hit subscribe. Stay tuned till the end of this video. I've got some news about what someone in particular thinks about a spot ETH ETF. All right, guys, let's get started. So here we have a chart of the monthly SPY, and as we know, we have been on an absolute tear over the past 6 months. And like I said, this is the monthly chart, and we've got 5 green months in a row. This is pretty rare, and so I wanted to discuss what that means for the stock market. Plus, we have charts like these, such as NVIDIA, that is absolutely ripping over the past year, and cocoa, which has gone parabolic. We also have the price of gold moving up, which generally indicates that people are starting to get fearful. We also have the dollar going up and Bitcoin. So, what does this mean for the markets? How can everything be going up? Well, let's just go back to the SPY to start with, because a couple things that I noticed here, anytime we have 1, 2, 3, 4, 5 months up, we generally get some sort of pullback. And we can just take a measurement. The last time this happened from top to bottom was about an 11% pullback. Here we have 1, 2, 3, 4, 5, 6, 7. And so if we measure that one, we see about 7% pullback. And so as you can see, that is kind of a normal style pullback. Here we had 1, 2, 3, 4, 5, 6, and we saw about a 12% pullback. So where could we go? Are we in store for something that's more severe, or is this going to be a shallow pullback? Well, I tend to be in the camp that we probably see some sort of more reasonable, normal pullback in that 5 to 8% range, and I'll show you why here. So if we were to pull back from this current range, let's just go from the daily close on this down to 5%. Well, there seems to be a bit of support there that would close some of these gaps and really put us back down around that 5,000 on the S&P, which is a good psychological number. But I could see us going back a little bit further. I've mentioned this. I could see us going back towards like a 480 or possibly even a 470, which would put us in a decent range here of supply and resistance around that 10% mark. So that's kind of my thoughts on the S&P. I could see that happening sometime in the next month or two, couple months. Uh, if we do see some sort of bigger pullback, when will that be? It's hard to say. No one really knows. Um, Sometimes we have these black swan events or flash sales where we see something more like a 20 or 30% pullback. Um, and obviously, the last one we had was the COVID uh, black swan. As far as the black swans go, obviously, we had a correction in 2022. But if we just take a look at the COVID, uh, let's go to the monthly here. The COVID crash we saw on the S&P, if we take from wick high to wick low, 35%. As I mentioned, Nvidia has been parabolic, and we got 5 months of green candles. Before that, we had 8 months in the first half of 2023. So, whenever we seen a pullback in the video, we saw something like 20, 21% the last time. We also have some other pullbacks. And if we go back to this COVID, it looks like not much on here, but you can actually see that. Let's see, where's this COVID one right here? Probably need to zoom in just a little bit to get a better look at this. But we saw about a 40% pullback during COVID on Nvidia. So you can see what some of those pullbacks look like. We can just take a look at the one in 2022 just to get an idea. And that was a 70% pullback. We also have cocoa ripping higher, going parabolic. So where are we in this stock market cycle? Well, if you're like me and a lot of people out there think that we possibly could go into the 100-year cycle maybe by the end of this decade or in the next 10 years. I think that is a real possibility because of the debt and the amount of government spending. Never have we really been spending so much percentage of our GDP. I think it's up around 25% or more spent versus the GDP. And obviously, we just keep going into more and more debt. And this cannot be sustained long term. So that is why I made the switch to crypto, and I want to discuss more about that. What position size should you look to hold of crypto in your portfolio? But we'll get into all that here in just a moment. Gold's breaking up, which, as I mentioned, generally indicates fear in the market. People are anticipating something. Plus, we know the gold broke this inverse head and shoulders pattern and has probably been suppressed for quite a while. And so I could see gold going to that $2,400-$2,500 within the next 6 to 12 months, possibly 3,000 over the next couple of years. And that would be good for things such as gold miners. This is GDX, gold miner ETF. I mentioned Newmont Mining Corporation the other day, which is doing well. We also have things such as the US dollar rising. Could we see the dollar go higher? Maybe. You got to remember the dollar is measured in relative strength to other indexes. So as other central banks are starting to cut, it does make the dollar look stronger. So cash is always good to keep on the side, particularly if there is some sort of pullback or correction, because it allows you to buy back in at lower prices. Another market I've been looking at is bonds and TLT, the 20-year Treasury. I think we have probably seen some sort of bottom here for TLT, and whenever the Fed starts cutting rates, I could see this going much higher and getting a pretty good return. Really, I'd be looking at this area here of resistance for TLT. I could see us moving up to that area there. Maybe we are putting in some form of a head and shoulders pattern here, but we'll have to wait and see on that. But I could see TLT outperforming. They're doing well in a rate cutting cycle. Obviously, we have Bitcoin. If you've seen some of my recent videos, you know I'm pretty bullish on Bitcoin. I could see this going much higher. And here is why. Here's one of the reasons why I see Bitcoin doing better. If we zoom out and take a look at Bitcoin, obviously is a volatile asset class, but if we take a look at the 2020 crash, reminder, S&P was down 35%, Nvidia was down, what I say, 70%, and Bitcoin was down 63%. Now, typically during a crash, what a lot of people want to do is they want to go buy the blue chips, the large stocks, because they know they will survive and they have big moats, lots of cash. So typically, those are the stocks that you see rally first out of a correction, like we saw coming out of 2022 and 2023. Of course, Bitcoin has rallied as well. But if we take a look at the performance of Bitcoin from the COVID lows to the 2021 highs, you see Bitcoin did a 17x. Let's just go look at Nvidia for comparison. And let me switch this over to the weekly so we can zoom in here a little more. So here we go. Get zoomed in here a little more, and we measure from the bottom of COVID to the peak in 2021. You see a 630% return. So Bitcoin did about 2.5 times more from the COVID low to the peak in 2021. I know a lot of people are skeptical about Bitcoin and worried about it or don't understand it. But once you understand the supply and demand effect of Bitcoin, it's truly one of the best asymmetric risk versus reward asset classes out there. And that's why I am heavy Bitcoin. If you want to start trading Bitcoin or some cryptocurrencies, as well as stocks, commodities, and other currencies, you can do so on Prime XBT. They're currently offering 7% uh, return whenever you sign up. So they give you 7% of whatever you put in. You put in $10,000, you'll get 700. You put in uh, $100,000, you'll get 7,000. Or you can get 25% off your commissions on trading. So you can sign up for XBT, their Prime XBT. There is a link down below in the description, and they allow you to trade crypto on margin. I put in a trade here the other day. I showed you guys that. Um, I like their setup. It's pretty good. It's pretty simple. And if you are in the US, you will need a VPN. So be sure to get yourself a VPN. I use NordVPN. Right now they're offering up to 65% off plus 3 extra months to help protect you while you're online, protect your security, protect your money and your profits. If you're interested, there's also a link down below. So let's discuss where Bitcoin is going and what I think the a good portfolio sizing would be in case we do see some sort of correction or recession. And we'll also get into uh, the Ethereum spot ETF here in a moment as well. Well, to see where Bitcoin is going, this is the monthly heat map on Bitcoin. You can see that there's a lot of interest up here at $72,000 and $74,500 range. The markets like to uh, make money, obviously. The market makers like to make money. And so I could see Bitcoin here in the short term over the next couple of weeks or month or two definitely going higher. I could see the markets going up here to sweep all these short positions to grab liquidity. And once we get above that all-time high, well, we're in undiscovered territory. So I could see the Bitcoin market going from anywhere around 75 to possibly $85,000 in the next couple of months. Then I think there probably would be some sort of pullback again. So far this cycle, they've all been around 20% or maybe slightly less. So I could see that happening for Bitcoin in the short term. And the midterm, I could see maybe we slow down a little bit. You know, if we do see a bigger pullback in the stock market, maybe um, in a couple of months or in the summer. And then I think we'll probably rally through the end of the year. Another chart, the Bitcoin rainbow chart. If you're into crypto or Bitcoin, you know this chart. Showing that we're going into a halving. Typically, we do see some sort of pullback before the halving. And it appears that we are in a left translated cycle where just the demand from all these Bitcoin spot ETFs has outpaced anyone's expectations. And so right now we are in that hodl zone, the middle of the chart, where anyone that's holding should just continue to hold. You could still get in if you wanted to. Just depends on your risk tolerance and what you want to do. You know, if you're looking at it from an investment standpoint and you want to hold for the next 5 to 10 years, I honestly don't think you're going to get Bitcoin much cheaper. You know, if we go up and run this cycle and then we come back down and get that 70, 75%, 80% pullback in a bear market, I still think you probably don't get Bitcoin much below $50,000 from this point forward. So Bitcoin still has a ways to run up. If we take a look at the Bitcoin chart and we zoom back in here a little bit of where we are at currently, that's COVID. We can do something like a fib extension to see where the price of Bitcoin could go. And so if we take this from the bottom to our current position, well, we can see that there's a possibility of where we can go here, just looking at some of these numbers. Zoom in here a little bit more. So it's pretty typical that you see these different points on the Fibonacci, as such as the 618, the 1618, the 2618, and the 3618. Gives you a pretty good idea of where things can go once you reach uncharted territory. It's a good way of predicting, and really from everything I see in trading, and a lot of these guys that really trade a lot of crypto and even stocks, these charts are pretty darn accurate when giving future uh, projections for price. So if we go to the 618, which would be probably your first real level of resistance, that puts us right around that $100,000 mark, just over. And if we go to the 1618, that puts us at 160,000, and the 2618 at 200, and we'll call it 212,000, and the 3618 was around $270,000. We can zoom out and we'll just go back here a little bit and zoom out and just see what we did last cycle. And so if we do a fib extension from the bottom of last cycle, well, you can see I'm sorry guys, I'm doing it wrong. So Scratch that, guys. I am still fairly new to TradingView. I got to figure out how these work. I will work on that. But basically, last time, from what I saw, we hit about the 2618 in this cycle. So it just gives you an idea where we may go. Um, but let's continue on. Let's talk about the Ethereum ETF. I was watching this last night. I thought this was pretty good. This is Mike Novogratz over on Anthony Pompliano posted this. He does great work. I'm sure if you're into crypto, you know him. If not, go check him out. He is awesome. So shout out to these guys, but I just wanted to play you this clip.
It appears Gensler and his SEC has drawn the line with Ethereum. And it's a little ironic. He spoke about Ethereum at a conference Galaxy hosted 4 or 5 months before he took the job at the SEC, when he specifically said it is not a security, right? Since he's been there, and this is my supposition, I don't know if it's true, I think if you allow Ethereum to not be a security, it's a slippery slope. What does that mean for Cardano or Polkadot or any one of the other, level twos or side chains or base chains, or like, what is the test if you let one? And so it feels they've drawn this line between proof of work and proof of stake. And I don't think that changes until the SEC changes. I think the SEC will change no matter who wins the election, Democrats or Republicans. If it's a Republican, I think you'll get much faster pro crypto changes than if it's a Democrat. The Democratic thing, and I'm a Democrat, I raise my hand, has driven me insane because I've been going to DC a lot. Hakeem Jeffries, Chuck Schumer.
So basically, the reason I wanted to play that was to discuss the idea if a Ethereum spot ETF will happen. It's projected it may happen in May. I don't think it'll happen in May. Um, a lot of people, I think, were anticipating this, but uh, it's probably going to be pushed out for some time. And really, this would be good for the crypto market because with the Bitcoin spot ETF, the halving, and then an Ethereum ETF, things could just get wild. And we don't want to see crypto run too quickly because it's just not sustainable, number one. And number two, what if we get into some sort of runaway inflation cycle where all these assets just keep going up, causing more and more people just trying to come in and catch up, and then we see even a bigger crash? So, something to think about. You can go check out this full interview. It was really good. I watched this last night. A lot of good points were made here. So, what does that mean for Ethereum? Well, I think Ethereum still goes much higher. I think Ethereum goes somewhere between 7,000 and 10,000, possibly higher this crypto cycle. And so right now we are sitting at 3,500. And as I've been mentioning on this channel, I really think if we zoom in here a little bit, anywhere in this 3,000 to $3,500 level, I think this is a good spot to get in. We've seen a pretty good pullback here over the last couple of weeks. And as Bitcoin moves higher, so do these other layer ones. And when Bitcoin is just kind of consolidating and going sideways and allows uh, things like Ethereum and some of these other layer ones and altcoins to just go higher. So I think Ethereum's kind of in a good spot. If you're looking to accumulate, you can see the RSI is coming back down and cooling off a bit. And I think that it uh, will do well probably later this year once Bitcoin starts reaching those new all-time highs and maybe starts to top out. I really think you'll see a lot of these other layer ones and altcoins do well. Same thing for Solana. And really, I think that maybe Solana outperforms Ethereum this cycle. I could see Solana going like 700 to 800 or possibly 1,000 this cycle. It's already done really well. I would look from a long-term investment perspective. It's not a bad area, but if you want to try to get a better price, I'd look at this $170 level or possibly a pullback to this 135 area where we had this previous uh, resistance and support. We could probably move that line just to kind of match up with some of these areas back here. So around, just call it $140. Another layer one that I like is Avalanche. I also like Link. I think Link is very good, but I wanted to point out Avalanche because I think that you're going to see the big narratives of this crypto cycle are going to be based around AI and gaming and real world assets. But Avalanche is one of those layer ones that um, they have a lot of developers building on the Avalanche chain, and a lot of stuff is related to gaming, which I think will do very well this crypto cycle. So Avalanche has done pretty well, and it's just sitting around and accumulating here. If we go down to the daily, we can get a little better idea of what we see here, and we can move this up. You can see it's just really accumulating here over the past month or so. So I could see this being a pretty good entry point for Avalanche. It may come back down around $48, or if it does pull back, maybe down to this trend line of around $43. But I think it's a good entry point for Avalanche. So let's talk about portfolio sizing. The reason I wanted to make this video today, um, in case we do see some sort of pullback. As I mentioned, I think it's always good to have cash on the side. If you're all in, you have no room to reposition without maybe cutting losses or um, if there is some sort of pullback, then you can't buy back in at lower rates. So I like to think about keeping like 10 to 20% cash on the sidelines at any time to be able to buy in case there is a good opportunity that I see. That's just kind of how I handle my portfolio. Now, it's up to you, but I think it's always a good idea to have a little bit of cash on the side. And there's ways of, kind of having cash but still getting a return. Um, As I mentioned, I think bonds are going to do well. Something like TLT, I could see doing really well as rates get cut. But we could also take a look at something like a T-bill, uh, which this is the 1 to 3 month T-bill, and this chart looks pretty wild when you look at it like this. But basically, this allows you to invest in bonds and get a dividend. I think right now it's offering like a 5 or 5.5% dividend. So not only is um, do you have liquidity, uh, set aside, you can set it aside in something like this and earn cash on it, and then you can pull it out whenever you need it. So for me, cash, say 10 to 20%. Bonds, probably 10 to 20%. Depends on your age bracket. If you're retired, you're probably a lot more fixed, set on fixed income, so maybe you're much higher. If you're younger, I think it pays to take more risk, obviously. And then gold. I like gold. I think, having a position of maybe 10, 15, 20% in gold is not a bad idea, especially if you do think there's something coming and you think gold's going to go higher. And I do. I really do. And that's why I've been buying gold miners because they've been underperforming relative to gold, but I think they'll do very well as well. For the rest of your portfolio, what could you be in? Well, you could be in something like a S&P, ETF, or one of these index funds. I don't think it's a bad way to go, but for me, um, I'm more heavy crypto because I do want to see some growth and just to protect from inflation. So that's why I am heavy crypto, Bitcoin, um, and some of these other crypto assets, such as the Bitcoin miners and some of these other crypto assets in layer ones. As far as layer ones, I'm only about 5% in on those. I consider all that more high risk, so that's towards the low end, and then I try to keep things that I think that are more safe assets like Bitcoin as a lot or the majority of my holding and some stocks as well. So if you're interested in buying crypto, Bitcoin, Ethereum, Solana, Chainlink, Avalanche, or even gold and silver, you can do so in an iTrust Capital account. They are a tax advantage IRA, which means that you don't have to pay taxes on your gains until you pull those out. They also allow you to buy, sell, and trade gold, silver, and crypto 24/7 with a low cost and no monthly fee. They have over 3,000 plus 5-star reviews on Google, and they have great customer service. I rolled over a portion of my IRA into iTrust Capital, and whenever I was setting this up, you can actually call somebody and get them online. You don't have to go through an automated process strictly. If you want to talk to somebody, they are there to help, and they've been great. They've been very friendly, very helpful. So if you're interested, you can click the link down below, um, and set up your iTrust Capital IRA. All right, guys. Also, don't forget to follow me on X, where I post over there things related to stock markets, investing, crypto, anything I see that may be helpful for some of you all out there. And I posted this yesterday. Excuse me, guys. Just because I was doing a little bit of reflection and sitting down and thinking about my investment journey. And I said Bitcoin's the best investment I ever made. I flipped houses. I did about 23% return per year on those houses, plus my labor. I was doing a lot of the work on these houses when I was flipping them in addition to my full-time job. So I was basically working two jobs. And I am an Airbnb host. I built my own Airbnbs, and those have done well. My first real full-time Airbnb is returning about 70% return per year, but of course I had to build that myself. And the second one actually was a bit cheaper. I do project it to do even better. I think it may see like a 70, 80% return ROI on investment, but nothing compares to the 150% in 1 year I've seen with Bitcoin, and all you got to do is sit back and watch. All right, guys. I hope you all have a great weekend. Enjoy your Easter weekend, and I'll see you next week. Until next time, guys, be legendary. Have a great day.